Hello everyone. As I mentioned in my last video, today we talk about a company that has become the largest producer of phenyl acetone in India. As some of you might have figured, this company is Deepak Nitrite. To find out about the latest happenings in the company, whether the company is worth holding in your portfolio, stay tuned. Also, to see some more videos like this and find out about some great companies in the Indian stock market, do remember to hit the red subscribe button below. Deepak Nitrite, the consolidated entity, can be divided into two parts. The first one being the standalone entity Deepak Nitrite and the other one Deepak Phenolics, which is a subsidiary company. Deepak Nitrite operates in three major segments: basic chemicals, fine and specialty chemicals, and performance products. Deepak Phenolics is the new division of the company into manufacturing of phenol and its derivatives. In-depth analysis of this segment will be done a little bit later. Deepak Nitrite started in 1970. It caters to over 30 countries and the list of countries is only growing. The company has been showing consistent profits over the next 50 years. Also, the company is well diversified as it caters to clients in various industries like pharma, petrochemicals, water treatment, paints, rubber, paper, etc. Now, let's discuss Deepak Phenolics in greater detail. Deepak Phenolics commissioned a plant at Dahej, Gujarat in November 2018 that can manufacture up to 200,000 tons of phenol and nearly 120,000 tons of acetone, a byproduct of phenol, annually. Until now, India was importing more than 80% of its requirement of phenol acetone from China. Now, with this new capacity, Indian companies prefer to buy their phenol and acetone requirements from Deepak. Also, there has been an environmental crackdown in China recently, which has led to a supply disruption in acetone phenol, benefiting Deepak as it has continued to gain market share, especially here in India. As you can see, with close to 60% market share, Deepak is the undisputed leader in India. The global phenol acetone market is expected to grow rapidly at 5% between 2020 and 2025 and reach $29 billion, and it's expected to grow even more rapidly at 6.5% here in India. The number of applications for phenol acetone is on the rise. For example, suppliers of paracetamol are trying to make use of acetone as a raw material in their manufacturing process. Also, companies like Vinati Organics are making use of Deepak's phenol in their newer products like butyl phenol. To know more, you can check out my video on Vinati Organics. Deepak Nitrite is also increasing the capacity of other chemicals in its standalone business. Another interesting thing to note is that Deepak has started backward integration for some of its products. This has resulted in increased margins, as can be seen in this chart. Margins have increased at basic chemicals and performing products in 2019 compared to 2018. These two segments account for more than 70% of the total revenues of the standalone entity. As you might have noticed, there has been a sharp turnaround in Deepak's performance products segment. This was thanks to DASDA, which is essentially used in manufacturing whitening agents and dyes. The performance products business, which was running into a loss until June 2018, started turning in a profit from the following quarter. That occurred due to a shift from the textiles and detergent segment into the higher margin paper industry. Favorable demand-supply dynamics also helped in increasing the prices. However, margins from DASDA have already started declining from 58% in Q1 of FY19 to 54% in Q3 and are expected to move even lower on account of COVID-19. Remember, we spoke how Deepak was doing backward integration and increasing its margins. A prime example of that is IPA. Deepak has recently started the commercial production of IPA. The major raw material of IPA is acetone, and as mentioned, Deepak is the largest manufacturer of acetone in India. The demand for IPA in India is close to 200,000 tons, whereas the domestic production is only at 100,000 tons. IPA has various applications like pharma and hand sanitizers where the demand is only growing. Deepak has manufacturing units in Gujarat, Maharashtra and Telangana. All the manufacturing facilities are running as of April 2020 and operating at 20 to 40% capacity utilization. By July of this year, the management expects the capacity utilization to jump up to 90% levels. Deepak has been growing its PAT and EPS at 35% over the past 5 years, which is quite impressive. As a result, the stock price has moved up by 9 times in this time period. Deepak has been growing very rapidly and is making good use of its cash by lowering debt, as can be seen from the debt equity ratio that has come down to very reasonable levels of 0.8, down from a peak level of 1.2 in 2018-19. The debt to equity ratio is expected to come down even further to levels of 0.4 in 2020-21. A debt to equity ratio of less than 1 is considered pretty good for high growth companies like Deepak. The ROCE, which is a measure of the company's efficiency, has jumped from sub 10 levels in 2017-18 to a high of 27% in 2019-20. However, I do expect this to moderate to 21% in 2021 on account of reduced activity due to COVID-19. That being said, acetone prices have jumped recently due to the disruption in the supply chain and have moved from $535 to $800 per metric ton, and this should provide some cushion to the margins. Deepak is currently quoting at Rs 530. At current market price, the stock trades at 13 times FY20 earnings of Rs 41. On the basis of the historical PE band, the average PE of the last 5 years is 25. Assigning a conservative PE of 20, we come up with a target of 820 rupees. But PE must not be looked in isolation when deciding whether to buy a stock. The near term is clouded for Deepak due to the manufacturing disruptions. So, I do not advise to add aggressively at current market prices. However, the long-term prospects of Deepak are quite bright due to the introduction of new products, increase in the capacity of its existing products, and increasing number of applications for acetone phenol. So, I believe one can start adding on corrections below 500 for solid gains in the future. If you have liked today's video, do not forget to hit the like button, and I would love to hear from you guys. So if you could leave your suggestions in the comment section. This is Sunny Ahuja for Sun Stocks. Have a great day.